Now let's talk about the power of blockchain, but specifically for brand new investors. So let's say, for instance, you're a person, and I don't even want to call you, don't have to call yourself an investor, but you're a person. Someone asked me the other day, they said, how can I invest in the blockchain but not invest in these coins? They said they don't want to buy coins, but they want to invest in a blockchain technology. Well, so I want to address that. And so the way that I would address that is first to say that it depends, right? Because every company is a little different. So first of all, with many of these coins, when you're buying the coin, that is investing in the technology, because it is the coin and the technology that works together that what makes it powerful. Blockchains themselves are not a new technology. Let's be clear. All a blockchain is a public ledger. These have existed before cryptocurrency. So just in trying to invest in a blockchain, that's not what is the valuable thing. What's valuable is when you get a blockchain that is decentralized and that is combined with a cryptocurrency. That's what makes that blockchain even a powerful blockchain in the first place. Because if it's not decentralized, if it doesn't have a cryptocurrency, then you're just looking at a ledger. That's no different than what Visa already has, and most of these companies already have it. Walmart and Amazon, they have their own accounting systems already, and so that's all a blockchain is. So with that being said, when we're talking about cryptocurrency, every cryptocurrency you see on CoinMarketCap does not have a blockchain. So this is important. You got coins like IOTA that is not a blockchain. You have many other coins that are working on other companies' blockchains. You have a company like Stemit, which has its own blockchain that hosts other companies, and they do their transactions on Stemit's blockchain. Same thing with Ethereum. They have a blockchain, and other coins work on their blockchain and their platform. So you want to start. One thing you can do is you can go to coinmarketcap.com if you want to see which coins and companies have blockchains and which ones don't. Because when you go to CoinMarketCap, it'll allow you to click on that company's website. Once you click on their website, you can look at their white paper, you can look at the details, see if they have a blockchain. Also, you can go on Google. When you go on Google, you just type up the name of the coin and then you type up the blockchain. For example, Ethereum, you can just type up ETHplorer or Ethereum blockchain or Ethereum Explorer. Usually the Explorer is going to show you their blockchain. And why is it important to see a company's blockchain? Well, I want you to think about it. It's important for a lot of different reasons. So one of those reasons why it's important to see their blockchain is because now you can see, it's like looking at the engine. It's like what's going on behind the scenes with the company. You get to see how many coins they have in circulation. You also get to see things like who owns majority of the coins, how are the coins distributed, what are the percentages. You get to see the level of difficulty. So let's talk about those three things. So the first one is how many coins are circulated. This is important because you want to know the volume in the market cap, right? You want to know how many coins, because it's about supply and demand. If there's like a Ripple, if there's 38 billion coins, you need to know that before you make your investment, because for Ripple to be worth $1, there has to be $38 billion in it versus Bitcoin only 21 million. So it's less coins. Therefore, you have more potential demand because it's a smaller supply. So the blockchains tell you this. The blockchains also tell you kind of how to distribute it. So to a certain extent, you can be able to see, and this is not every blockchain, but some of them, they will have, they will show you wallets and which wallets have the most amount of that coin. For example, a company like DAVOR, like DAVCoin, they'll say, well, this wallet has 80% of all of the DAVOR coin, or this wallet has 15%. And why is it important to know what are the percentages? And this is important because of manipulation and control. You want to know if there's just one entity or one wallet that owns 60, 70, 80%, that is potential for manipulation and control. I'm not saying it's a bad thing. I'm not saying it's a good thing, but it's something that maybe you might want to be aware of and consider that before you make your choice to see if you're going to invest in that platform or not, or how much you're going to invest in that platform based on you're seeing how these coins are separated and distributed. Okay, so it's very, very important, because that's why many coins, this is why people like Roger Ver. Roger Ver owns a lot of Bitcoin, and people like him, that's why they have so much influence, because they own so much Bitcoin. And now you can kind of have, you have a big impact on the overall coin in the market itself. because you can choose to hold those coins, make the price go up. You can choose to let them go, to distribute them. There's many things that you can do that it can impact the price of the coins that other people have. So that's very, very important to know that. Now, the last thing, we talked about the level of difficulty. Why is difficulty important? When I say difficulty, I'm talking about the hash difficulty or the mining difficulty, and or even staking difficulty. The reason why that's important is because that it tells you if you maybe want to mine that coin or not. A lot of people, they want to make money off of mining Ethereum or Dash or Monero. How do you determine which coin should you mine? Well, sometimes you can determine that by looking at the level of difficulty. So for example, Ethereum has a very high level of difficulty. And if you look on their blockchain or ETH, you can see they'll talk about their level of difficulty there. So versus you can go to a coin like Dash that has a much lower level of difficulty. So if you're going to choose to mine one, it might make more sense to mine the one with Dash because it has less difficulty. That means you have more potential return on your investment. So these are things that you want to think about when you're investing. That's why blockchains are very important, and understand every company doesn't have a blockchain. And just because it doesn't have a blockchain, that does not mean that's a bad company either. Companies like IOTA, they have like this Tangle system. I don't totally understand it, but you want to figure out how is this different, or even Hashgraph. How are those companies different? And then you can research that and take that into consideration before you invest and make your decision on how much you're going to invest and what strategy you're going to take. So all these things are very, very important, but I just want to talk about the blockchains. And make sure you like this video, subscribe to our pages as well, and I'll see you in the next video.